friends. This is the 0 Days to Expiration podcast. This is episode number 35. And today, something I haven't done for quite some time, and that is giving a general performance report on the reference account for the service. So the service has been in existence for a little over 2 years. The first year, I wanted to show that you could do 0 DTE in a professional manner with a very small account, a 4-figure account. And then the second year, I wanted to show that you could do it with a 5-figure account. And then next year, we'll do a 6-figure account. And so the report that we're doing now, because we've only been in business for 2 years, is the 5-figure account. I started this last June. It'll be this June that it will come to fruition. So this is pretty timely. We're on what day are we on of this report? Hold on. We'll get it up for you. We are 317 days in. So there's only about a month and a half left to go. And then we'll be done. So I wanted to give you an update where we're at. And I think the last time I did a report was maybe 6 months ago or something like that. But it'll give you a taste for what trading with this particular methodology and strategy is like. So without further ado, let's get right to it. It'll be very quick, I promise. And let's see, I'll go here. There we go. I should be able to make this a little bit bigger. There we go. That fill up the screen. All right. So this is the summary of all of the data, and you'll see it's a good equity curve. There's a little bit of volatility in it, but not much. The starting capital was at $23,000. Currently, we're at $40,224. About a 75% return so far in about 10 and a half months. And the key statistics, of course, is the total return. And then down here, you'll see the average winning trade to losing trade, and which is a little over 2 to 1. And the max drawdown has been 6.99%. I can show you exactly where that was. That was right here, but it was a very quick recovery. Came down quickly, went right back up. The previous drawdown to that was 5.25%, which was right here. And again, that was also a quick recovery. And then before that, the largest drawdown was 3.25% way back here. Now, the reason why we had these larger drawdowns in this area was that as of this point right here, I think it was trade number 220 or so, I switched from a single position to 2 positions, or double-sized my minimum position size, because that was my plan all along. I'd said that when I get to about $35,000, I would do that. And so once switching to that, the volatility, as you can see, sort of went up and down and got larger, but also not only were the losses bigger, but the wins were much bigger too. And so overall, I think that once this goes on and you're out around 1,000 trades or so, you'll never even see this. It'll look like a straight line. So speaking of the number of trades, this represents 287 trades since we started this particular account. And here's another very interesting stat. The average risk to reward is 9.6. That means for every dollar that I put at risk, we're looking at a potential of almost $10 of reward. So that's pretty telling about our strategy. And I guess one other thing that should be noted here is the percent profitable. And if you look at that, you'll see that it's just under 45%. So this is not a high win rate strategy, but it doesn't have to be. That's because the risk that we take is so small that it's almost not worth even managing. So instead of managing our risk, we make a defined risk and then manage our profits. So we're spending really the vast majority of our mental capital on managing profits. So there you go. There's the highlights. I think one thing that you should note is that we have this tenet that we say capital preservation first, profit second. So everything that we do is predicated around our process and our framework that we invoke, and it's a continuous improvement process. And we're focused on keeping everything in that process consistent, and that's what gives us our long-term, really incredible returns. I mean, it looks like I may in the next month and a half, if I keep up with this performance, may hit 100% return in a year. Now, I know there are others out there that have achieved much more or whatever, but this is consistency. The very first year in the four-figure account, I actually tripled the size of that account. And that's a little bit easier when you have a smaller account. When you start going to a larger account, like in the mid-20s or whatever, at first I had to deal with the pattern day trader rules, so I had to take things a little easier. Once I got beyond that, I could open up a bit. And when we get to the six-figure account, you'll find that the growth perhaps won't. I'm sorry, the six-figure account. You'll find that the growth won't be quite as dramatic. Instead of maybe going for 100%, we'll be going for anywhere from 30 to 50%, and that, in anybody's book, would be a fantastic return. So now you got to keep in mind also that this is my returns. These aren't necessarily a hypothetical back-tested thing or anything like that. It's not an alert service, so these aren't alerted returns. These are my actual returns that I took in my account. Now, is everybody doing what I'm doing? Probably not. But the difference is that I've been doing this for a long time, and I have developed the process and the strategy and the whole methodology. And then this is what we teach in the service, and this is what people aspire to, either doing this or possibly even better. So if you'd like to join the service, go down below, there's a 4-week trial, 0-dte.com/try, and give it a shot. Well, I guess maybe some other things that we can look at are here's all the actual returns. You'll see that I trade the SPX, the E-mini S&P. I don't trade the mini ES, the mini E-mini, the micro E-mini, or the SPY, but I do trade the XSP and the NDX. I've been trading the NDX lately. Now, I should also point out that all of our net returns that you're seeing in this report have commissions built in. So there's no skimping by here. All the relevant costs are factored into the returns. And you can see all the returns. Let's see, we started on June 21st. So when June 21st comes around, I'll do a recap, and we'll close out this account. And then we'll start off with a $100,000 account and go from there. So here are all the trades. Right up to today. Well, actually, I haven't recorded today's yet. Have I? Yes, I have. Here's today's 2 trades today. A small loss. Looks like about $70 or so. All right. There we go. Back to the big head. All right. So there you go. There's the performance report for the 0 DTE service. I think that if you can do something like that year in, year out, you're going to really build your wealth. If you'd like to learn how to do that, again, go down below, check out the trial, and we'll see you later. Peace to you all. Time for more music.